this. The world of tech stocks is, it's a true high-stakes arena, isn't it? Constantly moving, constantly innovating.
Absolutely. Nonstop.
And if you've been watching it all, Advanced Micro Devices or AMD, well, it's been making some serious waves.
Oh, definitely.
Its journey on the stock market, it's been nothing short of a roller coaster, often mirroring that, blistering pace of change in the semiconductor industry itself. So our mission for you today is really to cut through all the noise. We've meticulously gathered insights from, well, two crucial perspectives.
Right. The technicals and the fundamentals.
Exactly. The technical charts, they reveal the patterns of price movement that professional traders watch so closely. And the fundamental numbers, which tell us about the actual health and performance of the company.
The core strength. Yeah.
We're going to weave these together to give you a clear, concise, and comprehensive picture of what's really going on with AMD.
So you walk away with a real integrated understanding, not just scattered facts. And what's truly fascinating here, I think, is how these two distinct lenses, technical and fundamental, can sometimes appear to tell slightly different stories.
Yeah, it creates a bit of tension, doesn't it?
It does. Or, even more powerfully, how they can completely reinforce each other, providing just this undeniable signal.
Right.
Understanding both is absolutely crucial for anyone looking to gain knowledge quickly and deeply, whether you're just curious about how these massive tech companies truly operate.
Or maybe you're actively weighing up market moves and potential investment opportunities.
Exactly. It really gives you a much more holistic, informed view.
Okay, well said. So let's start by looking at the technical charts. They often tell a powerful visual story all on their own.
They really do.
When we dive into the monthly time frame for AMD, a very clear narrative just jumps out at you. This stock has been entrenched in a strong, long-term bullish trend.
Yeah, a really dominant one.
We're talking about a consistent pattern of higher highs and higher lows, which is, well, it's a classic break of structure pattern to the upside.
And that break of structure, it isn't just some technical jargon. Imagine it like a powerful river finally bursting through a dam it's been pushing against for years.
Oh yeah, good analogy.
For nearly a decade, AMD's price was kind of contained, right? But starting around 2018, it broke through that historical ceiling with such force. It signaled a profound long-term shift in market power.
So a real turning point.
Absolutely. It was like sellers who'd previously held the price down completely lost control. Buyers firmly took the reins.
And that kicked off this big upward move.
Yeah, it initiated this remarkable, consistent upward trajectory that still defines its long-term chart today.
So it's not just moving up randomly, it's consistently establishing these new higher floors and higher ceilings. That indicates sustained demand, right?
Exactly, sustained buying pressure. And if you zoom in on that monthly chart, you can clearly identify what technicians call a strong demand zone. It's between $54 and $80.
Okay, $54 to $80. Why is that range so significant?
Well, it's not just an arbitrary range. It's where significant buying interest consistently emerged. Historically, it's acted as a foundational support level.
Like a safety net.
Kind of, yeah. And what's particularly significant about this zone is that it aligns perfectly with that long-term trend line dating all the way back to 2018.
So multiple signals pointing to the same area.
Precisely. It reinforces its importance. Think of it as the market's bedrock, a price level where buyers consistently step in to prevent further declines.
Got it.
Now, the current bullish impulse wave, which has shown, remarkable momentum, actually began back in October 2022.
Okay.
This wave really solidified its position in February 2024. That's when it successfully broke and closed above the key resistance level that had been established way back in November 2021.
Right, I remember that peak. So breaking above it was a big deal.
Huge deal. This wasn't just another price movement. It was the market's emphatic declaration that the long-term upward trend was not only intact, but actually accelerating.
It signaled to traders that the climb was back on track.
Yes, with renewed vigor. Like the market built up immense pressure, then released it, and now it's surging forward again.
Okay, so after reaching that peak near $227, we saw the price pull back quite sharply, didn't we?
We did. A significant pullback.
And that was a retest of that $80 demand zone we just discussed.
Exactly, a crucial test.
But what happened next was key, right?
Uh-huh.
It formed a powerful bullish hammer candle right there.
That's right, a very distinct candle formation.
And that wasn't just random noise. It was the market sort of drawing a clear line in the sand. signaling a strong reversal from that crucial level.
That bullish hammer was indeed a strong visual signal of buyer conviction. You could almost see the buyer stepping in saying, no further.
Right.
However, it's vital to introduce a crucial note of caution here, something that often separates, the seasoned investor from the casual observer.
Okay, what's the catch?
Well, while the price action showed clear strength, the monthly relative strength index, or RSI, it's actually showing something called bearish divergence.
Bearish divergence. Okay, so for those of us who track these things, but maybe aren't staring at charts all day, what does that truly imply here?
It's a sophisticated kind of warning signal. Think of it like this. Imagine a car where the speedometer, that's the price, is still rising.
Okay.
But the engine's RPMs, which is kind of what the RSI measures, the underlying momentum and strength, aren't keeping pace.
Ah, so the effort isn't matching the speed increase.
Exactly. In simple terms, the price is making higher highs, but the RSI isn't confirming that strength with its own higher highs.
Interesting. So what does that suggest?
It suggests that while the stock is still climbing, the conviction or the internal power behind that climb might be weakening.
So not necessarily a crash signal, but maybe a yellow flag.
Precisely. It's not a guaranteed signal for an immediate reversal, but it definitely signals the need for vigilance. For seasoned investors, this signals a time to be nimble.
Like what? Tighten stop losses.
Yeah, maybe tightening stop losses, or perhaps considering taking some partial profits off the table, because history shows these divergences often precede significant pullbacks or periods of consolidation.
Either they don't guarantee it.
Right. It's about understanding those subtle shifts in the underlying market psychology that aren't immediately obvious just by looking at the price itself.
That's a really crucial distinction, the difference between just price action and the underlying momentum. Very helpful.
Glad it makes sense.
Now, if the long-term chart tells us the sort of direction of the whole journey, the weekly chart gives us more of an immediate roadmap, right? Showing us where the immediate detours and accelerations might be.
Yeah, exactly. Zooms in on the near-term action.
So shifting to that weekly time frame, you'll see that AMD was recently trading within what's called a descending channel.
Right. And a descending channel like that typically indicates a corrective phase.
Meaning?
Essentially, the stock was taking a breather, consolidating, pulling back a bit, but within that larger overarching bullish trend we talked about.
Okay, so a natural ebb in a strong flow.
Pretty much. It's where early buyers might be taking some profits, and new buyers are maybe waiting on the sidelines for a bit more clarity.
But then, something significant happened just recently, in June 2025.
Yes, a key development.
The stock broke and closed definitively above this descending channel.
Which wasn't just a minor fluctuation.
Right. This is a crucial development because it confirms a potential trend reversal, doesn't it? It suggests that corrective phase might be over.
Exactly, and that the upward movement is potentially ready to resume with renewed vigor.
It's almost like the market saying, okay, consolidation's done, now we're moving again.
That's a good way to put it. And looking at that weekly chart, there's also something else quite visible, a price gap around the 107.7 level.
Ah, gaps. I know technicians watch those closely.
They do. In technical analysis, markets often seem to aim to fill these gaps, meaning the price could very well be drawn back towards that 107.7 level in the short term.
Almost like a magnetic pull.
Sort of, yeah. Now, if this renewed bullish momentum continues, AMD could very realistically resume its upward trend toward the next key supply zone.
Okay, supply zone, where's that?
That's sitting around $170.
And just quickly, what defines a supply zone for our listeners? Yeah. Demand zone is where buyers step in.
Right. And a supply zone is essentially the opposite. It's a price range where a significant number of sellers have historically stepped in.
Taking profits or just getting out?
Both, yeah. Causing the price to stall or reverse. It represents an area of strong resistance.
Gotcha.
So breaking through $170, especially with strong volume and confirmation, that would be a very powerful signal.
Suggesting the sellers there have been overwhelmed.
Exactly. If that level is broken, we could potentially see the stock retesting its all-time high, near $227.
Wow.
Or even pushing higher in the weeks and months ahead. These are significant milestones that define the potential scope of its near-term movement.
So when you put all that technical analysis together, this setup for AMD, it really offers a fascinating blend of historical strength and immediate opportunity.
It does.
For those tracking market shifts, it presents a potential high-reward scenario if the current momentum holds. Offers clear targets for traders and, maybe investors eyeing longer-term gains too. But charts only tell part of the story, don't they?
Never the whole story, no.
As we often say, they reveal what is happening, but the company's underlying health, its fundamentals. That tells us the why and maybe how robust that move truly is.
Couldn't agree more.
So let's strip away the lines and candles for a bit and dig into the company's core. And with AMD, the first thing you notice when you look at the fundamental analysis is a pretty dramatic discrepancy in valuation estimates.
Yeah, that jumps right out.
Some analysts, like Alpha Spread, they peg its fair value around $142. That suggests it's, fairly valued right now.
Okay, reasonable.
But then you have others, like valueinvesting.io, suggesting a much lower fair value, like $45.60.
Wow, that's quite a difference.
Right, implying it's overvalued by approximately 68%. It's a huge gap. How do we even begin to reconcile such divergent views?
Well, it absolutely highlights the inherent challenge of valuing these high-growth tech companies. Future potential often outweighs current earnings, making valuation tricky.
Makes sense.
Let's break down some of the key valuation ratios. That might help understand why this discrepancy exists and what they reveal.
Okay, let's do it.
AMD's trailing price-earnings ratio, the PE, is around 105x. Though, interestingly, that's actually down from about 124x a year ago.
Still 105x. That sounds extraordinarily high just on its own. What does that immediately tell us?
You're right. Just looking at that number in isolation, it's astronomical compared to, say, a mature industrial company.
Yeah.
What it signals is that investors aren't just buying current earnings. They're placing an enormous bet on future earnings growth.
Okay, betting on the future.
Exactly. And when you see its forward PE, which is based on anticipated future earnings, that's approximately 38x.
Ah, so much lower.
Right. That difference shows the market's expectation that AMD's earnings are set to grow dramatically over the next year, bringing that ratio down significantly.
That's the hallmark of a growth stock then.
Yeah.
Investors paying a premium for that anticipated growth.
Precisely. Now, if you compare this to the sector PE, meaning how its semiconductor peers are trading, you'll find they're notably lower, typically in the mid-30s range for forward PE.
So AMD is trading higher than its peers.
Yes. This positions AMD as what we call a growth premium stock. This gap, this premium, it's essentially the market's vote of confidence in AMD's disruptive potential, particularly in, the AI space.
Right, AI is the big story.
Moving on, its price to book, or PB, sits at about 3.6x.
And PB tells us.
It tells you how much the market values the company relative to its net asset value, basically. Its assets minus its liabilities on the book.
Okay, is 3.6x high or low?
It's respectable. It indicates the market sees value beyond just the physical assets. It's valuing things like intellectual property, brand recognition, future potential.
Intangibles.
Exactly. But perhaps the most intriguing ratio for a growth stock like AMD is its price earnings to growth ratio, the PEG ratio. That comes in quite attractive at 0.3x.
Okay, a PEG of 0.3x. What does that specifically imply for our listener, especially when you compare it to that high PE we started with?
Yeah, this ratio is particularly insightful for growth companies because it kind of normalizes the PE by factoring in the company's expected earnings growth rate.
Okay.
A peg below 1 is generally considered good, and 0.3x is considered incredibly attractive. It often suggests that the company's growth rate is actually outpacing its valuation.
So it might be undervalued relative to its growth potential, even with that high PE.
That's the implication, yes. For a high-growth tech stock like AMD, which is expected to expand significantly in new markets like AI, this is a very strong positive signal. It suggests that despite the high PE, its growth story justifies a lot of that valuation.
That's a fascinating insight, investors paying for a future that, by some metrics at least, looks quite promising. But it's not just about what people are willing to pay, is it? It's also about the fundamental strength of the company's actual financial structure.
Absolutely critical.
And when we shift to the balance sheet, AMD truly stands out, doesn't it? It has an extremely low debt-to-equity ratio, somewhere between 0.07 and 0.13.
Yeah, that is exceptionally low. The debt-to-equity ratio measures how much debt a company uses to finance its assets relative to the value of shareholders' equity.
Low is good here.
Very good. A ratio this low means AMD relies very little on borrowed money. A clean balance sheet like this provides immense financial flexibility.
How so?
Well, it allows them to invest heavily in R&D, make strategic acquisitions, or weather economic downturns without being burdened by high interest payments.
So they're funding their growth mostly internally.
Largely through their own operations, yes. Which is a sign of robust self-sufficiency. Plus, it has strong liquidity support. Its current ratio is approximately 2.8x.
And a current ratio of 2.8x means, what does that indicate?
It indicates excellent short-term liquidity. Basically, for every dollar of short-term liabilities they owe, AMD has $2.80 in short-term assets readily available, like cash, or things easily converted to cash.
So that they can easily pay their immediate bills.
Exactly. It means they have plenty of cash and easily convertible assets to meet their immediate financial obligations. A very healthy sign. They're not likely to be caught short on cash.
Okay, that makes sense.
And that underlying financial health, it translates directly into performance. If you look at Q1 2025, AMD reported total revenue of $7.4 billion.
Solid number.
Yeah. They also brought in net income of $709 million and operating income of $806 million. But one of the most compelling figures, I think, and a true testament to their efficiency, is their free cash flow.
What about it?
It surged to $2.4 billion in 2024.
$2.4 billion. That's nearly double from 2023, if I recall correctly.
That's right, almost double.
Wow, that's not just a number. That's a serious indicator of operational strength, isn't it?
Absolutely. This nearly doubling of free cash flow, it isn't just some figure on a page. It's a testament to their operational efficiency and their remarkable ability to convert sales into actual cash in the bank.
And free cash flow is important because
It's what's left over after a company pays for its operating expenses and capital expenditures, investments in buildings, equipment. It's absolutely critical for funding future investments, paying down any debt they might take on, and potentially returning value to shareholders. Such a significant increase showcases a powerful engine generating real value.
Okay, really painting a strong fundamental picture there.
Yeah.
Now let's talk about recent news, because the market often reacts strongly to catalysts, right? Things that shift perception and potential.
Definitely. News drives short-term moves all the time.
AMD saw a significant 28% jump in its stock price back in June. What was driving that?
That was largely driven by two key announcements: the launch of their Instinct MI350 GPU
Okay.
and the Helios Rack AI system.
And this isn't just about launching new products, is it? It feels more strategic.
Oh, highly strategic. This is AMD making a major play to carve out a significant slice of the rapidly expanding artificial intelligence market. They're directly challenging the established players.
So the MI350 is aimed squarely at AI.
Indeed. The Instinct MI350 is specifically designed for AI training and inference, the heavy lifting required for AI models. It places AMD squarely in competition for those high-performance computing and AI workloads in data centers.
And the Helios Rack system.
That integrates these powerful GPUs into a complete, scalable solution for data centers. It makes it easier for large enterprises to actually deploy AI infrastructure using AMD's tech.
So it's about capturing market share in one of the most critical growth sectors right now.
Absolutely. And adding to that positive momentum, Analyst Research recently upgraded AMD stock to a buy. They raised their target price to $175, specifically citing this growing AI chip momentum as a major reason.
So analysts are endorsing this strategic move into AI as well.
It seems so. They're essentially saying AMD's bet on AI looks promising. However, this raises an important question. What about the headwinds? The potential challenges that could maybe temper some of this enthusiasm.
Good point. It can't all be smooth sailing.
Right. Despite all that positive news and growth, a crucial factor emerges from the analysis: the impact of certain U.S. chip export restrictions, particularly to China.
Ah, yes, the geopolitical angle. This is a complex area. For our listeners, what does this actually mean for AMD's bottom line? What's the potential impact?
Well, it means a potential and possibly significant impact on their revenue. Some analysis suggests that these restrictions could lead to a revenue hit of approximately $1.5 billion in 2025 alone.
$1.5 billion. That's not insignificant.
Not at all. It isn't just a minor setback. It's a substantial challenge that could definitely affect their top-line growth and their market expansion plans, especially in a critical global market like China.
Which has been a major consumer of advanced chips.
Exactly. So it's a key factor that really needs to be carefully considered alongside all the positive developments. It introduces this element of geopolitical risk into their otherwise strong growth narrative.
It's about understanding those external forces that can shape even the most promising growth trajectories for a global company like AMD.
Precisely. You can't ignore the macro environment.
So when we zoom out now and try to look at the whole picture, it's complex, isn't it? Really multifaceted.
It really is.
We have stellar growth, a rock-solid balance sheet, strong cash flow, all pointing to a fundamentally healthy and innovative company at the forefront of a booming industry.
The bull case, yeah.
But at the same time, we have these elevated valuations. They clearly reflect immense future expectations, especially around AI. But they also carry some risk, right? Because those expectations have to be met.
Absolutely. High expectations mean high pressure to deliver.
And then there are those clear challenges, like the export restrictions, that could potentially temper some of that projected growth.
Yep, the headwinds are real. Exactly.
Yep.
So this makes AMD feel like perhaps a strategic buy for growth-oriented investors, particularly if you really believe AMD will succeed in gaining significant market share in this booming AI sector.
If you buy into that AI growth story.
Right. The potential for disruption and expansion is clearly there, and it's supported by those strong fundamentals we discussed.
Right.
But for investors who maybe prioritize a lower risk profile or are looking for a clearer, perhaps less expensive entry point, well, waiting for a valuation adjustment or maybe some clearer resolution on those regulatory fronts, that might be a more prudent approach.
So it's a nuanced situation.
Very nuanced. Both the incredible upside potential and the very real external risks need to be weighed carefully depending on your own investment style and risk tolerance.
Okay. What a deep dive.
Yeah.
I feel like you now have a truly comprehensive understanding of AMD's trajectory.
Hopefully clear. Yeah.
You've seen how the market's pulse beats on the charts, revealing those long-term trends and the immediate signals.
The technical.
You've also seen how the company's financial heart fuels that rhythm, built on robust fundamentals and that impressive cash flow.
The fundamental strength.
And you understand the key drivers, both the immense AI opportunities and those geopolitical headwinds that are shaping its future. You've seen the full, multifaceted picture.
Yeah, and if we connect this to the bigger picture for a moment, it kind of prompts us to consider how much of the future is already reflected or priced in to today's stock prices for these high-flying tech companies.
That's the million-dollar question, isn't it?
It really is. And what new paradigm shifts, maybe beyond current expectations, perhaps some completely unforeseen innovation or a dramatic market restructuring what would be required to truly unlock their next level of value, to justify even higher valuations down the road.
It's a question worth mulling over, isn't it? As you consider the future, not just of AMD, but of the whole tech industry.
Definitely food for thought.
Absolutely. So, armed with this comprehensive understanding, you're not just observing the market. Hopefully you're equipped to critically engage with its narratives, to dissect the data, and maybe make more informed decisions as the story of AMD, and indeed the broader tech landscape, continues to unfold. Keep exploring, keep questioning, and keep digging deeper.